What is going on, guys? Welcome to Stock Talk with Nico Kritikos. Today, we're going to do some analysis to see how far will the stock market fall. And we're probably going to be basing this mostly, well, we're going to base it off a couple different things, but I feel like one of the biggest factors right now is the whole tariff situation that Trump has created. And so we're going to compare that back to what, 7 years ago, last time he was president, and we had a trade war and stocks fell. So as of right now, keep in mind the other statistic I believe, the thing I always reference back to is on average, every 2 years, the stock market will fall 10%. So keep that in mind. And then I think it's like every 7 or 8 years, the stock market falls 25% or something like that. But since in 2022, we just had a giant crash, that means that we're probably not going to have a, 25 or 30% crash this year. I think that's probably too much. But as for our 10% crash that happens every 2 years on average, that's probably more of what we're looking at. But I still want to compare it back to last time Trump was president because as of right now, so this is the Nasdaq index fund we're looking at here, the triple Qs. And so last month, this index topped out at 539, roughly $540 a share, right? And since then, we are down now today to 491, which is about a what? That's roughly 10%, right? Right around 10%. So this could be the bottom. 490 could be the bottom. And that's why, as you can see here, I've been building up my position quite a bit this past week. But I think there is definitely some more room for it to fall. And that's where when we go back to, let's say, the end of 2018, we had a pretty significant crash. And from peak to trough right here, you could see that we fell about 21%. Okay. So what that means is if we fell 21% now off of our highs, that would put the triple Qs right now at $426. If it played out the same way as it did back in 2018, which I think that's a pretty good comparison to go off of. I think it should be pretty similar. But really, I would say that since this is the second time it's happening, I would say that I feel like people were kind of expecting it more so from Trump this time versus the first time he was president. So I would say, and especially now we have a lot of investments coming into the US, especially the AI stuff. I mean, that's just a really powerful technology that's going to be implemented into so many different businesses. And Trump is really pushing that. So I would say it's not going to be, if anything, it's not going to be as bad. I would say roughly 20%, maybe 15% drop is what I'm expecting. But if the NASDAQ here, the index, goes to 425, $430 a share, that's kind of what I'm planning for, like worst case scenario in my head. That's why, as you can see here, I'm keeping some cash around just in case that does happen, because then I'm going to want to buy up more shares. It doesn't mean it has to go to 425, 430, but there's a chance, right? There's a chance that that's the bottom. So I would say anywhere between right here, 490 and 425, that's where I'm picturing the bottom is going to be. So I'm trying to, keep just slowly invest into the market, just in case it does drop that low. The other thing I want to look at here is I've been talking about this for a while, but this is the price to earnings ratio history for the S&P index. And as you can see, for the last year or so, we've been definitely higher than we normally are. And so it kind of does this. I'm actually happy that I'm actually really happy this crash is happening right now because this is not only a healthy thing for the market, but it gives me a chance to buy a lot of these stocks at a discount, and it puts the valuations back in a healthier place, and it just allows for, the next five run, not the next five runs, the next 5 years to be a bull run. That's kind of what it's allowing for. So if you go back, I would say the average is probably around a 23 or a 24, right? Not a 27 or 28. So if this market drops at least another 5%, maybe another 10%, then we're going to be in a healthy place, right? And then hopefully this crash will not last that long and things will turn back around and everybody will have a chance to buy these stocks at cheaper valuations. But if we look here, you can see that this started it peaked at, let's say, roughly August 26th, and it bottomed in December 16th. So almost 4 months, right? You could even say it started more like right here. So 9/23 to 9. So even a little bit less than 3 months, right? Something like that. 3 months is probably to be expected. And keep in mind that the last 2 weeks it's been falling very quickly. This has been a very dramatic drop. So we're really only looking at, let's see, we're only at, this is like week 3. So we're really only at 3 weeks. And we've already fell about 10%. So I would say we're going to fall probably another, I don't know, maybe 8%, something like that, hopefully. And then it'll probably go on for a couple more weeks. And that would be a pretty quick turnaround time. If this only lasts for 6 weeks or something, or even 7 weeks, that would be a really quick turnaround time. But it is possible that this goes on for, let's say, 2 more months. Then I think we're pushing it. Then I think we definitely would have to have the market start recovering in roughly 2 months. But I really am looking at that as like worst case scenario. I don't think we're having a 30% drop here. I don't think we're going into a recession. And that's just not the way I see it. So that is my analysis for the index and the general stock market. Let me know what you guys think down below, and I will see you in the next video.